Good morning, traders and investors. Welcome to Wednesday's snow-filled edition of Benzinga's pre-market info, brought to you by Options House. And Joe, how you doing this morning?
Well, Joel, you know what I'm going to say. It's pre-market prep, not pre-market info.
Okay, and Joe, I know.
Today's awkward moment brought to you by Joel Alvin Co. Elconin.
Don't give away my one of my surnames or one of my what do you call it
Aliases.
aliases. But Joe, I know you didn't get a chance to ask me yesterday, but I accept. I accept.
You accept what?
I will be the best man at your wedding.
I didn't ask you that, Joel.
I know you
But
did it, but in anticipation.
I imagine, though, that you are an expert at knowing how to party, so maybe it wouldn't be so bad to have a
An
gray-haired man
expert.
in my wedding
Oh
party.
man, no. Hey folks, we just gotta say congratulations to Joe. He got engaged over the weekend now, so he'll be getting married.
Woohoo, Joe!
Wow,
Yay!
Joe,
Yeah.
Thank you,
congratulations.
thank you, thank you.
You kept that quiet for a couple of
I
days.
did, I did. It actually happened on Friday, and we were out of town, so we held off on Barack and Michelle Obama publicly announcing everything, just so that we could enjoy our vacation a little bit. But what's even more exciting for me is that she actually said yes, so I consider myself lucky.
You know what? I think marriage is a great institution, and everybody should try it at least once.
Do you get a
It's a
punch
good
card
tip,
or
Joel. It's a
something
good
if it doesn't work out the first time?
Yeah, I'm still on number one, so I couldn't tell you. But
Okay.
congratulations, and if I'm not the best man at your wedding, I think Joel Young sounds like a pretty good name for your firstborn son,
Good
right?
Lord, Joel, please. Come on.
But we got a lot to cover in the show today. We got Doug Huber coming on of Federal Street Advisors, who takes a look at hedge funds and tries to figure out where to place clients' money. We also have Harlan, I'm not lying, Pyans on today, and Harlan loves coming on the show. I mean, I think he wants to come on every single day, but it'll be interesting to get his take. He's been pretty much not standing in front of this market and then letting it go, and now we've had a little turn of events, so we'll see how that goes. And we're gonna have to talk to Dennis today because Dennis talks about all his trading rules and everything, and he wasn't following a few of them yesterday. He got a little bit dirty in that plug power, and so we'll talk to him of that. He's working his way out of a few
I was
positions.
getting plugged.
Yeah,
I was getting plugged and plug. Yeah.
but
Trying to pick bottoms. Actually, I did end up scratching it all out, but I tried to pick the bottom when that thing was falling like 10 times. And no. I was following the rules good because as it was making new bottoms, I would cut out. So I kept, buying, trying to pick the bottom, and I'd cut out and I'd cut out. So I wasn't just holding on. You don't want to let that thing just continue to fall. But man, those were impressive moves in those
what was
stocks
your
there
first
yesterday.
theory, and where was that at? Your
Where's
first,
my first time I tried buying the bottom?
yeah.
Just you know what? I had this whole theory, and I was actually right on the theory, but it just didn't hold. That the guy from Citron was coming on CNBC, and I was like, I see this all the time. That something has a big move, they come on CNBC, and it bottoms during the segment because that's when everybody, the masses, see it all, and that's when everybody flushes out. Is right when the masses see it all. That often does happen. So the Citron guy was coming on CNBC. I was waiting as it was cascading through handles. I should have been shorting ahead of it, but I wasn't smart enough to do that. So, anyways, it's like 7:25, 7:30. They start the segment. Stock went down all the way to 672 during the segment, so fell another 50 cents. I'm like, there's the flush out. That's gonna be the bottom. I was buying at like 680. I bought some at 690. Bought some more at 680 during the segment. I was like, hurry up, end the segment because it's still falling as the guy's still talking. Anyway, segment ends and it does pop up. It pops all the way up to like 730. So I'm sitting pretty at this point. I sell a little bit, just a little bit of stock. I was like, I'm sitting pretty. I think that was the bottom. I think it could eventually bounce back to 8 because we just watched the thing go from like 11 to $7 in an hour. I was like, it could bounce a little bit more here. No, it starts cascading down, cascading down. Actually ends up making a new low. So then I got a cut out. So I cut out around 665 or something or 670, losing basically all the gains that I had just made, which sucks. But I'm like scratch at that point. But then I try to pick the bottom again at 650, and it bounced up to like 660 and then cuts down and goes to 640. So I cut out again. small loss, and I get out, I think around 640. Goes all the way down. Then you tweet out, Joel. I look at you, Spoos, tweet out 602 was the low from 3 days ago, the 3 day low. So I'm like, okay, Joel's calling the bottom. I'm gonna try to play with him. So I actually did. I bought the 60. I bought the stock at 602, right where the number where you were tweeting was the low, and it bounced up to 630, and that was enough to get all of my losses back from the previous 2 or 3 buys. And I actually ended up scratching the overall trade. So, but so many rules broken there, Joel. Talk about those rules, like
Well, first of all, when you bought it at like the 690 level, and you go, it's going to 8, and I'm like, why the
that was
hell
just
is
a
it?
random number.
I'm like, why the hell is this going to 8? Because Dennis, decided to buy it and he's going to sell it at 8. And I just then that's when I kind of Skyped you. I'm like, Dennis, you're breaking a lot of rules here. And, there was no response, no response. And you're like, I'm out. But the thing about it, what you did is you did break the rules, but what a lot of people do in that situation is they don't cut out. They don't get out and re enter. What they do is they add to the losing position, and
That's
sometimes
the
that can
mistake.
work out. But you didn't do that. You kept on taking your losses or whatever. But how was the liquidity in that? I mean, did
Oh,
you?
so liquid. I mean, that thing is so liquid. You're throwing out offers. If it's at $6, you throw out a 605 offer and you're done. You don't even see the price trade up there. It's just taking anything within like 5, 7, 8 cents. So throwing 3 cents above the where the bid offer currently is, you're done in like a second. It's so liquid,
Yeah,
Joel.
that's
It
what I was
was
just gonna tell people.
ridiculous.
If you want to get involved in things like that, and you're gonna try and pick the bounces or whatever, and you want 20, 30 cents on there, don't don't try and react to the tape. Put the orders out there because there's liquidity and people will take
Oh
you
yeah.
out. Yeah, I mean they're just looking for liquidity, so you just put those kind of orders out there. But it kind of brought the whole market down too.
It really did. I mean, they were flying out of all the momentum stocks. Then they started. I don't think anybody thought this stock could go from 11. Where did it get up to yesterday? 1170 or something.
Yeah, 1172.
Oh,
Yeah.
1172. Citron report comes out obviously, and they say the stock's worth 50 cents. And like you were saying, Brent, though, there was a delayed reaction to that report.
Yeah, big
What's
time.
Yeah, like when did the report broke? What, around 11:30, and it really
Yeah,
didn't start
just
selling off for about 10 or 15 minutes later.
no, just a few minutes after 11:30 actually, and then it really didn't start selling off until Andrew Left made it on CNBC and kind of was touting the blog post that they put on Citron. Didn't say anything new really on the CNBC appearance, but it just kind of started hitting the retail investor scanner and just kind of started plummeting after that.
Yeah, so you can see if you look at the chart from the time, it was 11:30 came out and really started selling off maybe 11:45 and then sold off harder and harder and then it just started cascading and then they started cutting out of everything in the momos. Everything started turning in the afternoon. You saw Facebook was trading up near the highs around $72. It gave back $2. You saw a lot of other stocks. Obviously, I had the Twitter outage there in the afternoon too, which probably didn't help the stock, but Twitter gave back a buck and a half. You saw Tesla falling and giving back, more of its gains down another $4 here again. So it really started hitting everything. And obviously, the two other stocks at the most was Ballard Power, BLDP, which went from $8 down to $5, and then the FCEL, which went from 450 down to $3. So these things just basically obviously the other one got halved. The other ones were down 35%. So just an incredible reversal in all these things here yesterday. And that's what happens. Like we knew, it's going to end badly. You just don't know where. But I mean, if you were buying it a week ago, you're probably still up in the thing. So still people sitting on gains on these stocks.
It was funny. You gave me that idea for the article, and that was pretty early on. Like if you just would have shorted 1,000 shares when you gave me that idea for the article, I mean you would have been sitting pretty. And
Oh
so
yeah.
I'm like writing the article, and I'm like, and the stock has come down to 801. Then I write another paragraph. Oh, I got to go change that. Oh, the stock gonna come down to 750. Write another paragraph. That's why the writing is so hard. Because the markets are so dynamic and they change so fast. I just felt like getting in the options house room and start screaming, "Get out! Get out!" But let's just do a quick daily analysis here. The day after,
the aftermath.
Yeah. I mean, are you gonna try and play this thing today, or you gonna let the dust settle?
I can't have it on my screen is the problem because when it's on my screen, I want to trade it. I just get the itch, and it's like, oh, it's moving, and you start thinking you're a hero, and you can pick the bottom, and you do all kinds of stupid things. I almost should just take it off my screen and not look at it, but then it's like, it's like a train wreck. You just gotta look. You just can't help yourself. So I just, I don't know. I should take it off my screen. Where do you think? So give us some levels here, Joel. Obviously, just looking, from the last couple of days, the two lows, yesterday's low 595, and then you were citing 3 days ago 602. We are trading right there right now, but in the pre-market, we've been quite a bit lower. Where have we been here in the pre-market, Joel?
We just hit 549 in the last bracket.
549. So
Yeah.
are you looking at that level as a potential where it might, catch a bid there,
Yeah, I mean,
or?
I would use that as a definite, a definite place to cover a short if it did get back down there. Initiating a long could always be tough. What I would like to see would just be, just a day. I mean, obviously a day of consolidation or two, and then maybe get a double bottom or a bottom within 10 or 15 cents of each other, because you're really still in kind of a gappy area here, all the way down to $5. But I think you got a situation here where you got some people that have been sitting on some shorts here for the last 3 or 4 days, and they're gonna look to take it in here between $5 and $6. So 549 pre-market low. I keep an eye on that. Now on the other hand, if we got above six and we held $6 for a sustained period of time, trying to buy it on strength a little bit. Taking a look at fuel cell here, that kind of
It got a downgrade from Cowan here today too.
oh,
So Cowan jumping in here. Did you have that analyst report from Cowan there, Brent? What they were saying about fuel cell? Because it's interesting, they
Let me
come out
see.
after all that and give her a downgrade.
Right.
Well, they're one of the only firms that had coverage of plug power, to believe it or not, and that was interesting in the Citron article that they were one of the only firms on the street. They had a 550 price target, and they had just recently done an offering for the company too. And just another thing I want to alert our traders to is before the stock went parabolic and plug, the company itself sold 22.4 million shares at 574. So obviously, it had no inkling this thing was going to run up to 1172. But for the fuel cell, just kind of hanging out at $3. 303 was yesterday's low. In the pre-market, despite the downgrade, 295's been the low. So we'll see a little bit more support there at three. And then the last one is what? BDLP.
Yeah, but
BL
no,
BL
Joel. He always
BLDP,
transposes them
I
all.
think.
BLDP.
Yep.
Okay. BL.
Hey, on that Cowan call, this analyst has been doing great. He initiated coverage on, let's see, just one sec. He had a huge buy call when he first started coverage on it. It was February 3rd was the outperform rating, the first outperform rating from Cowan, and as you know, the stock just been off to the races. Looks like a valuation call from the Cowan analyst today.
Yeah.
He believes shares are fairly valued based on the near-term outlook.
270 price target is what
Yeah.
he's got on it. So actually, I guess so he's downgrading the stock from market perform to outperform, and he's saying 270. He's raising his price target from $2 to 270. So I guess he was a little conservative before, but that's still 50 cents lower than it is now. Also, I think Stifel Nicholas maintains their buy on fuel cell energy, raises their price target up to 410. So you got a couple analyst moves here on this
The
one. Stock is flat right now.
the Stifel analyst saying expecting quote sizable wins over the next few months, and that was actually a little bit different. Dennis, the analyst reiterated a buy rating, so he's saying,
Okay.
okay, I see the news that's coming in. I still think I got a buy on it.
Of all the charts, this Ballard Power here at the $5 level seems to be finding a home. So if you're looking at active sector, keep an eye on the $5 level in Ballard Power. Dennis, finally, let's get to the S&Ps here.
Just wait before you go off. We're going to go 1 second, but I just want to say is that these things have all almost moved positive now. Last night I was watching the trading; these were down in the entire after-hours session. They've been down the entire pre-market session. You've now got Plug Power back up at 614, which is positive. You got BLDP trading flat here at 510, and FCEL trading flat. So these things want to go positive here right now. So keep an eye on the settlement prices too. S&P futures, yeah, Joel, we're down here a little bit.
And you know what it was? It was the dreaded triple close that we talked about yesterday. You had three closes within 2 points of each other: 76 and a quarter, 78 even, 77 and a quarter. Had a nice fake out early in the session, got over 1880, but came crashing down. Took out yesterday's low at 1863. I give that minor support at the pre-market low 1859. But things really open up until the lower 1840s. Think we'll get there today, Dennis?
I don't know what to say here because it is a pretty good reversal here on the charts, and you are seeing volatility start to spike up here a little bit too. There's some concerns, obviously, yesterday with the huge sell-off. I mean that if the retail traders were in those Ballard Powers and in those fuel cells and in the plug, they might be looking at some of these other stocks that they're way up in and saying, "Oh, I want to get out of those too." So it's not surprising that we are getting some follow-through selling here pressure here this morning, but we also know that the buy the dippers are just relentless and they keep coming in. And I wouldn't be surprised if we sold off another 10 or 12 points if they come and the buy the dippers come back again. So, no, I don't think we're going to get down to 1840, but I do think we could get into the 1850s here, maybe the lower 1850s. And I think the buy the dippers might come in. Also, Joel, we have a huge rally in gold here this morning, up $13.
Gold has refused to go down. I mean, despite the market going up, there's been a flight to quality there. We did break above that major resistance at 1353 to 1355. That been holding us for the longest of time. So now you could use that as a potential support level if gold does go into reverse. Uh, Recent high in today's session, 64.10. Things really open up. I mean, looking at the dailies, really not a lot in there. Looking at the weeklies, you have to go back a little bit farther, and you could be approaching that $1,400 level. You did have a high in September, late September, 1375.20. You use that as a target, and then 1400.
And they are starting to buy some of the weaker stuff. Like we said, we've been saying this for the last few weeks. This year, they've been kind of trying to buy everything that was weaker last year. They're buying everything, really. They have been for the most part this year. But gold has been in favor here. It seems like the market goes up, gold goes up. The market goes down, gold goes flat or goes up. So, and now we're up another $13 here again. It's starting to look like a breakout here again. I think you still got to be a buyer of gold on the pullbacks. I think everybody's underinvested in it, and everybody's, once fear comes into this market, it could really start catching fire. What about crude? We got a good sell-off going here in crude, Joel. Broke through $100 there yesterday. Now we're cascading down. We're down to 98.41 here in the pre-market. Crude's in some trouble.
Yeah, I was looking at this, and it was kind of rare. Now, I'm sure our traders are aware that crude doesn't really officially close for the day session until 5:15 Eastern time, and that after everyone kind of looked away, it took another dip and ended up making a 99.32 low and coming back to close at 1003. Never saw that. Never saw that 1003. Open lower. Only rallied 12 cents, and then we puked down to the 98.30 level. Just hanging on the lows here, kind of in a scary area. Really no major support in the 98 or the 97 handle. You had a low at 96.78 back in February, but crude kind of following the market lower.
Let's move on to some individual stocks here. And we got a few movers. PAY, which is Verifone Systems, reported earnings there last night. So we do have some good news here for you. PAY is popping a cool 10% here this morning. It's trading up at 30. Well, actually, it's up even more now. It's up at 32.43. Went out at 29.25. This is a new 52-week high for PAY. They reported earnings 31 cents versus 27 cents. Also 436 million versus 429 million. So beat on the top, beat on the bottom. They're raising guidance. So triple win here for PAY, and the stock is flying.
32.80 is the recent high in the pre-market. Pulled back to the 32.20 level. We'll be keeping an eye on those levels here early in the session. Looking at the daily chart, had a couple highs over 30. Actually, a double top that you busted above 30.70 and 30.72. That's a buck and three quarters away here, but that's going to be your support in the session. Looking at the weeklies, and this was a while ago in 2013, early 2013, they came out with some horrendous news in February, late February of 13. Took the stock down. That's when it was trading over 33. Took it down under 20, and it took a long time to recover. But the high in February of 2013 was 33.10. So let's keep an eye on that level if the move can continue through the pre-market high of 32.80. So 33 bucks is my number here.
EXPR Express Inc. That retailer that you see in the clothing store and the malls and stuff. This stock is getting murdered here right now. 57 cents versus 59 cents. 715 million versus 722 million. So missing the top, missing the bottom. The guidance is brutal. Full year 2014 seeing a buck 03 to a buck 23. Analyst estimates were up at a buck 58. They're also lowering the quarter guidance as well.
Yikes.
Stock went out at 1824, is trading 1570 here this morning. So here's a stock that had some nice consolidation going, and boom, all of a sudden making another 52-week low. Looking at the charts here too, you see the big gap down there in early December. That's probably from the last earnings report when the stock went from 24 to 20. So here's another similar move off a disappointing earnings report.
Right, taking a look at the pre-market activity, you got a you got a spike down to 1465, Dennis, if you can believe that. So the stock's actually been a buck lower. Getting a pop up here to 1582, so 1465, 1582. Those are your early parameters. We have obliterated the former low of the move at 1627, actually trading below that now, so that could act as a potential resistance point as well. Going back on the monthlies here, holy smokes! You know you're in trouble when you have to look at the monthlies. You're going back to the monthlies here. The stock bottomed under $14 back in July of 2013 at 1370. So I don't know. Might be a little much to ask for today, but if you do get below that 1460 pre-market low, I'm sure you'll see buyers all the way down to that 1370 low.
Big winner of the day is OXGN. The stock is up 123% right now, positive. Zyberstat trial. OXGN flying here on these results. Interesting enough, they halted the stock there yesterday, actually. Well, actually, it was after hours, I guess. But if you look at the chart from yesterday, it started popping right there. Actually, they did halt it yesterday, and then they reopened, I think, after the close. But if you look, it started popping from 225 to 242, so they just not got it halted in time. Whoever bought it in that little pop there from yesterday is probably pretty happy right now because the stock is popping 127%.
Hey, you're right, Dennis. They did actually halt it after the news was out. So you get the code halted news pending most of the time. In this case, it was code halted news disseminated. So there was about, I don't know, literally about 8 seconds that you could have acted on before they actually halted it.
So anybody who bought that and who was really on top of things, yeah, an 8-second window there. So you don't have to be a high-frequency trader to take advantage of news. There you go. If you're on it, we can respond in 8 seconds. Joel can even respond in 8 seconds.
Yeah,
Can't you,
yeah,
Joel?
yeah. Even me. Uh, looking at the pre-market trading, Dennis, you've gotten a pop over the $6 level. 624 has been the high in the pre-market. Coming back and finding a home here at 550. Looking at this chart on the monthly, it was just, it wasn't even a good, what do you call those things where they measure your heartbeat here? Well, this stock looked like it was dead. There was just no activity hanging out
Yeah.
at the 250 level. You got to go way, 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 way back to find out when this stock is. Must have done a reverse split or something, huh? Because I'm
I
getting.
don't think so. I think it was news back then too, Brent. I remember this. This was like back at the end of, or right in the beginning of 2013, so like a year ago when the stock popped from like 50 cents to like $6. Was this a reverse split? I think this was news back then too, wasn't it?
I see a 1 for 12 split
Oh,
on
it was okay.
12/27,
Good
December
call,
27.
Joel.
Actually, that's December 27, 2012.
Okay, Joel, you're
The
right.
old
So
man
to
got it right.
strike that,
Yeah.
strike that from the record. It wasn't popping back then, but
Yeah, because I'm
it,
looking at my monthly here and I see the thing did trade 1,400 back in '07. So
Oh, yeah, whenever you see that, it's a pretty good tell that it's had a reverse split. When you see that all-time high at 1,400, it's like the AIG high, which is a billion or something, isn't it?
I just want to alert our traders though to the $6 level. I mean, we hit $6 right on the nose in mid-November of 2012. You came up to that level again in January of 2013. You came up to that level again in February 2013. You have traded over it in the pre-market by a hair. You are now trading below it. Let's see if someone here makes a stand here and at least try and take some profits. I mean, come on, Dennis. If you were just accumulating this thing at $2 and it's opened up near $6, I mean, isn't your
It's a
inclination?
lotto win. Yeah,
Yeah, it's a
I'd
lot.
be ringing the register. How high did it get in the pre-market?
It got over 6. That's the thing. It got to 624. But since then, made a couple other spikes above 6, but has quickly come down. So I think 6 could be a good level. Maybe some institutions been sitting on this thing since 2011. If this ever gets back to 6, I'm getting out. So that's the level I'm keeping an eye on.
Let's take a look here quickly at GM because they had the news there yesterday where the stock was just dying there. What was the news there, Brent, on GM where they were just rocked it, knocked $2 off the price? But I've got the goldfish memory there. So
I got.
what
But
was the issue with GM?
I think they had some more details on the recall. Is that what you were gonna say, Joel?
yeah, they actually knew about the recall some time ago. They didn't recall the car, and then 13 people died.
Wow, and they just absolutely murdered this stock yesterday. It was trading up there around 37 bucks and just started cascading throughout the entire day, gave back $2, which is an enormous move for General Motors. That's the biggest move that it's had. Oh man, that's probably the biggest move it's had in the last year. $2, $2 fall.
On the
That's just
downside,
huge.
yeah, yeah. Well, it actually went to 38 to 36 back in January. It's funny about this thing because this is a just a pattern I'd like you guys to look at in a lot of stocks here. A lot of times a reversal will be keyed off like a double top or a triple top, and boy, you couldn't have asked for a better triple top at the $38 level, 38.01, oh 05, and oh 05, going back to last week. And actually, you traded 38.01 on Monday. Now the question is, where does this puppy stop? Closed off the low, but we're just kind of hanging out at 35 here in the pre-market. So it looks like finding a little support there. And then you can look at the couple other lows that it had, 34.76 on the February 13th, 34.62, and then the low of the move at 34.36. But I expect things to thicken up here on the bid side if it does go.
Maybe in the mid 34s as they
Yep.
approach that 34, 36 low. But when you see a stock fall to a lot of times the next morning, you will get follow through with it, which obviously the market's down, so we're getting that. But you have a lot of retail guys. You have a lot of people that aren't there during the day. They come home, look at the news, or read the morning newspapers. General Motors fell $2 yesterday. I want to sell it and get out of that. So that's why a lot of times after an initial big move down, you sometimes the next morning see a little bit of a follow-through move, and sometimes a wash out in the first 20 or 30 minutes before a reversal. That could take us into the mid 34s. So that's why I'm looking at General Motors as a potential area. The whole 34, 36 area obviously needs to hold.
So the headline from late yesterday was that the Department of Justice is officially going to get involved in that ignition, the GM's handling of that ignition recall. So I mean,
Scary.
yeah, exactly. You get the Justice Department in a headline, and it's immediate headline risk.
We got DJ popping in here with GERN, and yeah, this one is getting murdered. This is your big loser of the day
Yep,
here.
absolutely.
Obviously, it's something to do with drugs, I would imagine. Here,
Im,
Brent,
Im,
what's the news on GERN?
Imetelstat is the company's product. Geron says IND application for Imetelstat is on a full clinical hold.
Ooh,
Not good
not
news.
good when the
Nope.
FDA puts you on a clinical hold. Stock trading $1.76 right now. Went out at 4.40 on 1.3 million shares. This is destroyed.
Well, it's holding in here, 164, the low in the pre-market, multiple lows over the last hour between 164 and 168. So someone may be using an opportunity here to cover short or risk $1.65 on a long here. Just to take a look here, the stock does get the pops and the drops. And last time it dropped down under this $2 level, it labored almost the entire year of 2013 between like a buck and $2 here. So, actually a buck to buck 50. It consolidated for 9 months, and then it broke out to the upside here. So maybe looking at the same situation today. I mean,
Hey,
when it's on hold, that means it ain't coming back. I mean, it means like it's almost
it
done, right?
I mean, it could potentially come back, but it's going to be potentially a year, many months until they get it off that clinical hold. So yeah, it's definitely something you don't want to see in the headlines. Hey,
Let's.
I was just gonna jump back to the GM news really quick.
Yeah.
Delphi was the company that provided GM with those ignition switches, and if you look at the chart from yesterday, Delphi had a strong day yesterday. Just something I wanted to note real quick.
It had a strong day.
Delphi was up. Let me see.
Breaking out.
Exactly, and I mean, if you look at the GM chart at the end of the day when that Department of Justice headline hit, Delphi had almost the exact opposite reaction. It closed about a percent and a half higher yesterday.
What's the symbol on that?
Yep.
DLPH. I know after the whole reorg there, it used to be. What was the symbol back in the day on Delphi? Wasn't it like DP? I don't
Yeah.
remember. DLPH is what
So
it is
this
now,
is
though.
kind of going counterintuitive here because if they made the switches, then
Well, they did make a comment. Delphi made a comment yesterday that they believe that they did not sell any of those ignitions that were in question to any other companies besides GM. I don't see how that's necessarily good news, but the market reacted on the contrary.
all
Hmm.
right. Well,
Breaking out to new highs, man. You always want to be. No, those are the kind of stocks you want to own, the ones that are making new highs, and that broke out yesterday. 67.92 the high yesterday, closed 67.77. That was a big breakout because you had multiple tops in the whole 66.70, 66.80 area. Or actually, no, I'm looking wrong. 67.35, 67.34. So it was a good breakout yesterday for Delphi.
yeah, and I guess if you think they're going to have any liability on this, you may want to use it as a chance to exit the stock. I mean, to me, if they made them, they could be easy as culpable as GM who put them on the cars. But what do I know? I'm not a mechanic.
Price don't lie. Price don't lie. Those stocks breaking out. Let's look here. Wow, McDonald's. Holy cow! Yesterday, did you see that move? That thing opened, and I'm kicking myself here too, actually, because I was looking at the 96 level. I actually got short in the pre-market at 96, and then it was starting to get bid up. This is like maybe 5 minutes before the open. I was like, oh man, somebody wants to own this stock. I could see it in the pre-market action, so I cover my short. I actually got covered at 96 or 96.05. I lost like a nickel only or something. But I could just tell by the bidding action in the pre-market, I was like, somebody really wants the stock. So I'm like, I'm covering my short. And I was like, phew, I got out of my short. Why did I go long?
What what
Here I
was the
was. I got short the
news?
thing and I didn't reverse. And I should have turned around and bought the thing because that thing opened and was just off to the races for the first hour. McDonald's popped $3. It never does that. I've never seen McDonald's pop $3 just like that on no news, really.
There was no news. I mean, what are they?
I don't think there was much on it, Brent. What was the news? Was there any news on
Mm,
McDonald's
What did?
yesterday?
Trying to remember. I feel like there was an exec speaking at a conference. No, I didn't really see that.
There
Yeah,
wasn't much
I don't see
yesterday. That
anything. Kind of maybe
Yeah, there was a
responding
speaker
to
this morning.
the. Yeah, there was a speaker this morning. Maybe just continuing to respond to the same store sales figures, which were Monday.
Yeah, just gone though. It broke out. The $96 was absolutely huge. It was holding it down, the whole 95, 80, 96. That was a big level and took it out and did not look back here. We are pulling back here this morning a bit on McDonald's. Like you were saying, McDonald's CFO was giving some comments. Says the company's looking to optimize capital structure, sees an opportunity to push leverage up a bit. It's pulling back with the overall market here a little bit. Probably a little bit of profit taken from yesterday too. But wow, that was a move, man. That was a move, McDonald's. Maybe the stock's going to start getting ignited here.
I don't know. 98.92 was the high in yesterday's session. That coincides with some other highs you had at 98.99 going back to September this year. So it's got to be some size accumulating here at the $99 level. I mean, I looked at this thing. I saw the double top in 97. I'm like, I'll lay them out there. And boy, that was wrong. That just blew right through there. Very uncharacteristic move here for McDonald's. I don't expect to see a lot of follow through on this. I think the $99 level will be defended, and it's going to has to take back some of that ridiculous move. I mean, Mickey
I
D's just doesn't do it. Doesn't move $3 in a month sometimes, and it moves three
I
bucks in a
smell a
day.
bet
Okay, what do you
coming.
want?
I smell a bet
What do you
coming.
want?
You still owe me a Potbelly lunch, and I'm willing to put it on the line here, Joel.
Okay, what do you
I
want?
think Mickey D's. It's at 98.25. It just is bid 98.30 here in the pre-market. So we got to go from the pre-market pricing because the market's pulling down. We're weaker. We just ticked at 98.30. So let's take that price. 98.78 is where we went out. So 98.30. I think it trades 99.30 before it trades 97.30.
Very light volume on this
Very light
sell.
volume.
Yeah, so why don't we just go from the close?
And what do you want to give me from the? But then you got a 40, 50 cent lead already with the market down 5 points. So what do you want to take from the close?
All right, we'll split it. We'll split it.
No,
Well,
no, 98.30 is the price right now. We're down 5 points in the S&P futures. Was down the entire after-hours session. It's down the pre-market. It's going to be some profit taking off the bat. I don't think the profit taking can push it down. I think it could push it down maybe into the low 98s, maybe into the higher 97s. I don't think it hits the lower 97s though before the next wave of buying comes in. I think this thing could be a triple-digit stock here very
no,
shortly, but
no, 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 no.
obviously we know there's going to be some resistance up there at the 100 though, so that's why I want
Okay,
to have it a little bit
okay.
lower than
All right,
that.
so we'll go 97.50 versus 99.50.
97.50 is too high. I got to be lower than that. I almost want like 97 versus 100, but I know you're not going to give me that. So
Uh, well, let's use the 98.50 as the price.
no,
So
98.30 is the price. Look at your pre-market. Come on. There's no 98.50. It's offered 98.39 right now. This guy's sitting there all day 98.39.
yeah, he really wants to buy it. He's waiting for another
Okay,
offer.
we're gonna have to come back to this because we got our guests waiting here. We're
Okay.
trying to negotiate here on this bet here yet.
Okay. All right. We'll see what Harlan Pyan thinks of our wager here. We'll be right back with our first guest of the show. Welcome back, traders and investors. We have Harlan Pines back with All About Trends, and he is going to weigh in on our potential wager in Mickey D's. Harlan, how you doing today?
Hey, I'm all right. I'm all right. I'm thinking McDonald's here. I don't know, you guys.
What did
Hundred
you think
bucks
of
might
yesterday's move? First of all, McDonald's, like that was a crazy
huge.
move.
Yeah, weren't their numbers not exactly all that great?
Same store sales from Monday. Because
Yeah.
there wasn't even any news yesterday. This thing was just popping off with them. Looking at the Monday, Brent, are you still there? What were the numbers on Monday? Report a 0.3% drop in global same-store sales. Analysts were expecting a 0.1% decline. Yeah, they weren't
Mm,
that great. They were a little bit
yeah.
below estimates. So if
Mm,
you're looking from a fundies perspective, that move was not justified. But holy cow, man, somebody wanted in, and they wanted in a bad way.
Yeah, they did. Yeah, they did. So, well, you might want to sell your peanuts while the circus is in town.
So
Once
you're
it's,
taking Joel's
you
side
know,
on this?
well, I don't know. I mean, I see support here, 96, 96 and a half short term since first of the year. Then you got some stuff at 97 and a half. So, I don't know. I guess for me, I'd be looking for other ponds to fish in, per se.
All right, Dennis, I'll go 97.30 versus 99.30 for lunch.
You'll do it? Okay, let's do it.
Okay. All right.
There you go.
97.30 versus 9. We made a bet. We just had to get
There you
that
go.
going.
Yeah,
There we
we
go.
just
We made a
we
bet.
just ticked 98-20, so I got the edge.
Oh, yeah,
Yay!
that's what he does. He looks at that and
Okay, Harlan, what
That's
about
good.
this
latency
market
arbitrage
here?
here. He's
What
close
about
already.
the S&Ps? Is it time to hit the panic button here? We had the dreaded triple close up there in the 1878, 1876, three closes in a row. Do you place any significance on that, or what are you using as your indicator up here?
Well, you were sitting at a trend channel resistance. When you line up all your tops off of the November highs, just line up all your tops, and you're closer to a trend channel resistance than you are support. So you're in the zone. 90% of this is getting in the zone, and the other part is 10% just sweating it out while you're in the zone. I'm not going to read into it too much just yet. 3 to 4 days doesn't exactly make a big trend. But let's watch where some support levels are. Around 1855-ish, 57. Somewhere around
how do you
there.
get a support level there? Is it a trend line? Because I see absolutely no support there at all whatsoever.
I'm looking at a daily chart.
There's nothing
I'm looking
there
at the
though.
daily.
There's no. I mean, there's. Was there a close there or an old high? Because I like to use. I mean, I'd like to. I mean, just pointing it out because at 1855 to me, I mean, jumped up from 1843.50. That was a low on March 4th. We kind of just blew through this whole 1850 handle. Is it a retracement number that you're looking at, or I see two?
Well, look at the December and January highs on the S&P. You had that kind of a little top there, end of the year, and then mid-January, kind of looks like a little double top, and then we sold off to 1740, so then we busted through, and old resistance tends to become new support once broken, is the rule of thumb. So I'm looking at those highs right there. We could come back into that zone. Maybe worst case fill the gap from the Russian situation, and but then you also have the 50-day moving averages at 1828. So you got some support levels below that aren't too far. Maybe a couple of bad days. Maybe you just decide to sit and spin up here and work off the big move from was it 1835-ish, the big slam that we had.
Yeah.
Maybe you come back down there and fill that air pocket. So this could be a trading range up here. I think as far as the indexes, I'm just not really seeing personally. This is where I really want to be. Where are the big trades? That's what we're looking for. Where's the trades with structure? And so for me, I guess it's a tale of two tapes. The indexes, they just kind of sit here and chew you alive. Whereas, individual stocks, they tend to be where all the action is.
What are you looking at from individual stocks here, Harlan? Well, what's got some nice setups here for some of our listeners?
Well, you guys like these lower priced ones. Let's take a look at HIMX, Google Glass People. On a daily chart, you can kind of see it.
That's itching.
Tried to break out of a nice big base. Why did it get turned yesterday? Well, the market got turned. 3 out of 4 stocks will trade with the market, to a degree. So that's one. I'm watching that one really close. Another one, lower priced, QTWW.
I got calls on that thing.
Do you really?
Yeah, I do, but you know what? I'm regretting it actually because I had a call spread going on it, but I'm too high. I think I got 3 days ago when it started breaking out. I went the 11s and the 12s, and I think I put it on for 15 cents. It's going to go worthless, I think, because it obviously pulled back here with the last couple of days. I liked it on that first when it broke out, but then you had the 2 days here now, and now everybody's jumped, and the open interest shot way up, and I'm not in love with it. Now it'll probably go after the expiration there next week.
Well, you can see that it kind of pretty much broke out of a base, give or take right around 9. But, now, the last 3 days, line up your tops. This could be, fresh breakout, and it's pulling back off its highs. So, I'd at least keep an eye on it. I don't know how anything with the word power or fuel is going to trade from here on out.
That didn't
You
help it
know,
yesterday. That did not help it yesterday. Just having the name fuel and it probably didn't help it.
you know, it's like I said. I mean, we talked last week about what power cell, fuel cell, Ballard, all of that. You know,
Yeah.
it just goes to show you. I mean, you got to sell your peanuts when the circus is in town.
That's a good
So
tip.
How
so that's why I never chase stocks.
for another lower price stock here? How about RF MD? Are they involved in a merger, or is it? Am I getting
RF
them?
micro devices? I don't know.
Do
Not
you
sure.
follow that stock at all? I mean, we got a nice double
Um,
bottom here, 719, 720. Trying to hold that level. You follow that issue at all?
no, can't say I do. But you can see it gapped up at 6.5, ran up to like 7.5, and now it's starting to pull back and it's starting to digest that gain.
They're doing
When
like
do you
So
look to get in, like on something like this, Harlan? Like obviously, maybe not on this stock particularly, but just using it as an example, are you looking like for a 50% pullback on the move, a pullback to the moving average? Because I know you love to buy those pullbacks. When would you be interested in this? Like how far would it need to pull back to spur your interest?
well, let's say the market pulls back. Let's say the market pulls back to support levels, 50-day moving averages. It's ugly out there, face of fear type thing. And then you start to see the indexes stabilize, and then all of a sudden the indexes start to take off again. All right, then I want to look at what are my names doing. Are they following through with the market? Are they triggering? Are they breaking out of pullback off high patterns? That also comes into play too. But there's really no set, because the stock can build out for as long as it wants. I'm not one to go tell a stock what it's supposed to do. My job is to watch what it actually is doing and live in reality of what is versus what we think it is. If that makes any sense.
Hey, is there any? Okay, so if the market's coming off here and you don't have many major buys on your radar, is there any setups on the short side that you're looking at?
The funny thing is, I'm seeing a lot more on the long side. I see a lot of names, a lot of market leaders that this is why I say it's a tale of two tapes. The indexes are doing their thing, but there's a lot of market leaders off this recent run that are pulling back off their highs and they're pulling back to support levels, 50 days, whatever. I mean, take a look at data, DATA. Hit a peak of 102.5, and it's been pulling back off its highs in an orderly manner.
Do you like that
Another
whole
one,
90 level, or are you looking to pick a bottom in this 90 area? Because we obviously bottomed there 2 days ago, 89.46 and 90.02 yesterday. There, it's holding up. Well, it hasn't really traded at all here in the pre-market, but are you looking at playing it off this 90 area?
I do like that it's trying to stabilize down in this 90 at the last 3 days. But, there's also that gap low, 87.5. And then what? The 50-day isn't far behind. So that's a good-looking name. If it crosses over to the upside, you take the trade, and one of three things are going to happen. It's either going to work, you're going to wash, or you're going to get stopped out. So that's one. Another one, let me find it here. Springleaf Holdings.
What's
Broke out at
what's the symbol?
LEAF.
Okay.
So that one doesn't look too shabby either. And, support's right around 25.86. It's pulling back off its highs. So, support levels do define your risk. And you can have stocks that, pull back to support levels, and then they just take right off again. Green Mountain Coffee, I still like that. We're long at like 111. Obviously, it sold off to us. But, it's been pulling back off its highs, too. A couple other
It looked like
names.
it was trying yesterday, though, GMCR, probably before the broad market hit everything. I always like using, when you see a big macro sell-off like that or a big broad-based sell-off, and you see which stocks were the leaders before the sell-off, sometimes those will become the leaders when the market turns again. This one obviously was trying yesterday before the overall market hit it. So I kind of like that setup, too. Maybe if that GMCR holds above that whole 103 area or something, maybe that's, not a bad play, too.
Yeah, as long as it's above the 50-day, I'm happy with it. I'm fine with it. Stocks do fluctuate, and I allow for that. Nobody's perfect. Nobody ever hit 18 holes in one. Nobody ever will. A couple other names are. How about seeing as how bios are all over the place. How about BIB? There's the Ultra Nasdaq Biotech ETF.
BIB, $96. Did that split? That must have split there like a month ago, month and a half
There's
ago.
a few. There's a few of them out there.
Yeah.
How about
Yeah, the bot.
So,
how about ORLL? Is that something you follow at all? Rockin' Hilly is chirping in on that one. Just see if we can get any technical setup in that.
you sure that's a symbol? ORLL.
I don't
Uh,
have it either, actually.
yeah, I don't know. Maybe my eyes are bad.
Well, move off on that
Oh,
one. ORLY maybe means
yeah.
O'Reilly
O'Reilly.
Automotive. O'Reilly Automotive, the auto parts maker.
O'Reilly Auto Parts. Ooh, look at the setup in that thing. Holy mackerel.
Yeah, see, it's pulling back off its highs.
Oh
You
man!
know,
Now, see,
so
So
Dennis,
it's
how am I going to look at that chart, Dennis? What am I going to tell you looking at that chart?
you're looking for the
well,
breakdown on it. Joel always likes to see 3, 4, 5 lows in the same area, and then he likes to see it cut through that area and flush everybody out that was leaning on the area. So he's looking at it as if it trades through that whole 149 area, he's seeing this thing trade down to possibly 145, 146. How'd I do, Joel?
Excellent. You're hired.
yep,
Okay,
I agree.
Harlan, any closing thoughts here, just on the market in general here? S&P's continuing off. You sound like you're not really biting on the sell off here. Instead, you're just looking for things to purchase, which is definitely
Yep.
been the way to go.
Well, that's what I'm looking for. We pretty much plan our trades and trade our plan. And for us, I'm looking for names that are in clearly defined uptrends above the 50-day moving average that are pulling back off their highs. It's really as simple as that. You take a look, and I try not to chase stocks. I'd rather buy them as they're pulling back to support, so I don't get sucked into a name that goes ballistic, and the next thing you know, one day comes along, wipes out 3-4 days worth of gains. So even keel. I'm looking for the stuff like Palo Alto. So that's kind of the stuff that I'm looking for. When I see them, you trade what you see, and that's pretty much the best anyone can actually do.
Okay, all right. Well, thank you very much, Harlan, and we look forward to having you on again next week.
You bet, guys. I'm watching McDonald's all day today.
Okay.
For the bet, we'll see. Joel, have
I'll
to
see
take
you
me out
guys
for
later.
I'm
a
getting hungry,
McDonald's
man.
meal.
I'm gonna get rid of that lunch. I'm gonna take you out for the steak dinner on Thursday, and then we're gonna
See
be
you later.
fine. Okay,
Yeah.
thank you.
See ya, Harlan. You know
Okay.
You
what?
bet. Bye.
Well, are you taking me for a Big Mac? But you want to know what I tried on the weekend? And my wife had been talking about this, and we saw the advertisement was Papa John's, which is PZZA, has the whole, or as we say in Canada, PZZA, has the whole new double cheeseburger pizza. And I was like, that sounds awesome. I want to try that thing. So we went out, all excited, go out, get the double cheeseburger pizza. It's got the ingredients of a
Oh,
Big Mac on it. I kid you not. It
oh,
almost has like the Big Mac sauce. It's got pickles. It's got hamburger on it. It's got the cheese. It's literally the ingredients of a Big Mac on a pizza. I was like, that's genius. Bite into the first piece, I was like, this is pretty good. It tastes kind of like a Big Mac. Bite another one, it's like, yeah, it's kind of like a Big Mac. Then after about the third or fourth bite, it got weird. It was like, well, it tastes like a Big Mac, but it's a pizza. And I was like, I don't know if I like that. And my wife's like, I don't even know if I can eat this. So it was such a disappointment. We were so pumped up to get the
oh,
double
man.
cheeseburger pizza from Papa John's, and it was just disappointing. Anybody else try that pizza? Anybody else
I
tried that
don't.
yet in the chat room?
You know what? If I mentioned that to Lisa, would try a double cheeseburger pizza. I think she would kick me out of the house. I mean,
I almost
seriously.
feel like shorting Papa John stock
Oh,
just because I'm
that's that.
so disappointed in the double cheeseburger pizza.
Okay, Rockin' Hilly has finally got it right with Oracle after everyone went out and shorted O'Reilly Auto Parts going through 149.50. This Oracle chart looks very interesting here. Last three lows within 5 cents at the 38.60 level, kind of holding up in the pre-market. I'd really like to see it hold that level. Got some more lows under the 38.40 at the 38.40 level, but I think with the weak market, I'd be use that 38.60
Yeah.
more to cut out if it takes out that level instead of waiting to see what happens at 38.40.
Kind of similar to the O'Reilly setup where you got three lows in the same area. It looks like that O'Reilly had 5 or 6, but you got three lows in the same area. And we always say such a thing as triple or quadruple bottom, but sometimes there is. But it starts to take that out, starts going through a 38.50, 38.40, could cascade down through the 38 handle pretty fast. So that's the level it needs to hold. Somebody is defending it there in the pre-market. 38.62 is where it's bid right now. Another guy backing him up at 38.57. So they're trying to hold that level in the pre-market. Let's see if they can hold it. The market keeps cascading down. It probably won't if the market does turn and find a buyer here in the first 5 or 10 minutes of the regular session in the first half hour. Maybe it can hold.
They're kind of late into the earnings season, aren't they? Or I'm not sure if they already reported. I know that they're kind of.
Brent, when do they report? Oracle? Did they report? I don't remember seeing Oracle numbers.
No, I don't think they have come across yet.
And if you look at the gap in the chart, I bet you it was like mid-December that they reported last time. So they're probably due here any day now. Let's go look at
They
our trusty earnings.
reported December 18th, so we're looking
So,
kind of extrapolating out probably next week.
Wow. So, okay, so we got Oracle. So we got something exciting coming up from the earnings front because it's been pretty slow there on the earnings front. Let's talk imbalances here, Joel. We got 5 minutes here before the next guest. We do have sell imbalances pretty much across the board here, leading the charge. Pfizer, 130,000 shares to sell. Had a big sell imbalance there yesterday, too, I remember. It's trading down here 15 cents. That's one of your big ones. I'm just looking at a few other ones. You got Alcoa with 186,000 shares to sell. That's knocking it down. What about that 1230 level in Alcoa? Holy cow. Got up there again yesterday, 1235. That's becoming like a brick wall up there, that 1230, 1235 area.
yeah, I don't know if it was yesterday or the day before you had mentioned that had kind of showed some weakness, but yeah, 1236 was the high yesterday. If you were quick, you got that. 1236 was a high last Thursday, and then you came up to that level again, 1232 and 1231 back in early January. So that's the major level here for Oracle, or not Oracle, Alcoa. And then coming back on the downside here, had a spike low, double bottom, 1171 from March 5th and March 10th. So that's your major support level.
Do see an institution selling 199,000 shares at 1230. So somebody's saying, I missed it 2 or 3 times. I'm not going to miss it again. I'm putting my order out there. So keep that in mind as you get in the higher 1220s. You're going to run into the high freaks and the opportunistic guys probably leaning on that 1230 guy. But I don't know if that's going to come into play because we're trading down 1205 here right now. A couple buy imbalances here. Interesting enough. J.C. Penney actually, and that stock was on a charge yesterday before pulling back. It's got a buy imbalance here today again. 177,000 shares is trading up 881. These imbalances, like we said, the ones that come out at 345 don't seem to move the stocks a lot, but the pre-market imbalances really do. And here you've got a stock trading up here again on a buy imbalance, 177,000 shares, and J.C. Penney's trading up 14 cents despite the market being down 7 points.
Yeah, I remember talking about this one in the upgrade by Citigroup. Took it up to the above 910. We're trading at 919, and I just looked at those multiple highs at the beginning of the year and last year, 907 and 917. Now it did get through it by a dime. But you just have to respect an area like that when you have 4 highs again, and then you're opening up to that level. It didn't hold, sold back off well under $9. I think now we're going to find offers well ahead of that 928 high. People probably lining up here at $9 even. Coming back on the downside, minor support at 859, yesterday's low, and then better support at your 2-day low at 832.
Couple other buy imbalances. It's always interesting to see buy imbalances on a day where we're down 6 or 7 points because those stocks can potentially obviously open too high. It's also showing you what might have some potential relative strength too when you're seeing a huge buy imbalance off the bat. American Express, 80,000 to buy AXP right now. I'm assuming that's probably going to get offset. I doubt it's going to open higher because financial company and usually those tend to move with the market, but AXP has been showing some good relative strength here, and 80,000 to buy is nothing to sniff at early. It is trading down here right now at 92.75, but obviously if that buy and balance does hold, this thing could potentially open higher and give you a chance to maybe try a lower short off the bat.
It's AXP does have some overhead resistance. So if this buy balance does take it up, you have a perfect double top at 93.88. It's not going to push it up quite that high, but 93.88 is ahead of the all-time high at 94.35. So it's not going to push it up. Maybe if you want to try and get short this thing, is settle near the low, 93.03 low, 93.20 close. Perhaps use the settlement, but I wouldn't want to short this thing down 45 cents. And DJ's popping in here on ZGNX. I don't know, with that kind of symbol, it's probably some kind of farm.
Isn't that the animal like
Zoogenics.
drugs or whatever?
Are you thinking Zodus? I think.
Oh, I am thinking Zodus. You're right. What's Zogenex? What do they make? What kind of
Zogenics.
drugs are they?
They make. Let's see.
Assuming they're drugs, but
Yep.
kind of drugs.
It is a. Let's see. A pain pill, I guess.
Yeah, well, they better give some to their shareholders here.
Down 12% here this morning.
Yeah, let's just take a look here for DJ. Pre-market low 364, and you had that nice low here at 377. So you have popped up above that. Also, you had a major low at 375. So hey, I'll look at that as a support area. Wouldn't fall in love with it though, because as you can see on the daily chart, if it doesn't hold that 375, it's just kind of ugly here, going back down under 350, perhaps at the 320 level.
Just from the imbalances, that's pretty much the highlights. I'm seeing a little bit in Walmart buy imbalance, Chevron small buy imbalance, so a Procter and Gamble. So you're going to see some mixed stocks here. Wouldn't be surprised if some of those defensive names that were showing some early strength yesterday, like the Procter Gambles, like the Walmarts, they were pretty close strong yesterday too. Did see a little bit of good relative strength here again today. Joel, I guess we got our guest coming up, so I'm going to leave you and go get ready for my open.
Okay, yeah, we're going to have Doug Huber of Federal Street Advisors, has a tough job tracking hedge funds and private equity, so we'll get him on in 1 second. Be right back with you. Welcome back, traders and investors. We have a very special guest on today, Doug Huber. He's Senior Research Analyst at Federal Street Advisors, and he has the tough job of identifying, evaluating, and monitoring hedge fund and private equity managers. Doug, how you doing today?
Good, thank you. How you guys doing?
We're doing okay. A little bit too much snow, but what are you gonna do? Can't do anything about that. Just
No.
quickly before we get into the interview, just real briefly, give us your education and your market background.
Yeah, sure. So I graduated from Babson College up here in Wellesley, Mass. kind of in the teeth of the downturn in '08, and since then have actually coming out. I got a job here at Federal Street working as a junior analyst covering hedge funds, and subsequently have grown in the role and taken over as lead analyst in the space.
So you're a youngster.
Yeah, not late 20s, late 20s.
Yeah, you'd fit right in here with all these kids I work with at Benzinga. But okay, so tell us about your firm a little bit, who your clients are and what they do.
Yeah, absolutely. So we're an investment advisor. We advise on roughly $4 billion. That's non-discretionary, and it's predominantly families and foundations. So we use about 80 client relationships, 75% high net worth, and about 25% foundation.
Okay.
And oh, sorry.
No, I was just gonna say. And so your specific role at the firm is.
So I'm the lead analyst on the alternative side, which is predominantly hedge fund investments. We try to put together kind of concentrated hedge fund portfolios for our clients, about 8 to 12 managers that we recommend widely across the client base. It can be anywhere between kind of 10 and 35% of an allocation, but in practicality with clients that actually use kind of the LP structure, it comes out to about $400 million in hedge fund investments.
Okay, so so you're looking for these for this discretionary alternative investment funds. Just on the average for the portfolios, you're like you said, 10% to 20%. To give a little bit of different exposure in the market.
Yeah, we view them as complements to existing asset classes. We have a core equity and a core fixed income bucket, and we look at hedge funds as complementing those, reducing risk while being able to kind of put up return in line.
Okay, and do you file commodity trading advisors as part of this?
We don't do anything in that space, and not because we have an issue with it per se. We tend to prefer kind of security selection, fundamental bottom up. It's to us, it's a process we can evaluate, and it tends to get a little grayer when there's kind of thematic or trend following type things going on. So it kind of precludes us from CTAs, macro, quant, things like that.
Okay, and on the average, I mean, there are fees. I mean, are there set fees for these alternative investments as well as incentive fees?
Yeah, generally it's kind of 1 to 2% on the set management fee side and kind of 15 to 20 on that carry performance side. Although I think, given performance over the last 5 years, there's increasing pressure from investors to kind of keep those fees at bay. I think it's been a lot harder to justify them in the recent past.
Okay, so I mean, is that of the hedge fund? They've kind of been disappointing here versus the overall market? I mean, pretty hard returns to beat in the overall market. Is it has it kind of been like, hey, we should have had that other 10 or 15% in equities now? Is that the way people are feeling?
I think, listen, you look at last year, right, and equity markets up mid-30s, right? Anything that wasn't long only equity was kind of an opportunity cost to a portfolio. That being said, I mean, as advisors, we can't try to time the market. So I think, there's that part of it. I think, running a hedged equity book, whether it's, 70% net or 10% net is tough, right? I mean, the last 5 years, correlations have been higher, dispersion's been lower, and so you're ending up with a netting game, and to add value from both sides has been more difficult. I think the fortunate thing we're seeing is in Q4 of last year and kind of into the first part of this year, we're really starting to see alpha on both sides of the book again, which is interesting. I mean, it's knock on wood, that's a very good thing, and I think hopefully we'll have a great run. But it definitely has been a tougher 5 years to keep up with just such a bull market.
Okay, so do you tend to? I mean, do you put just like a set amount with a hedge fund, and then you just keep that amount, and you say, hey, we're going to give them 1 year, 2 years, 5 years, or whatever, or do you try and give them X amount, and then after a year, if you have X amount of profits, do you pull them out, or is it kind of like do you reinvest it, or do you try and get your money, your original investment out of them?
I would love to say it's as easy as set it and forget it, but I think we look at it from a portfolio perspective. When we do a lot of work up front to be comfortable with our managers, we don't like turning them over. It's too much of a cost on our end, both at the client side and both for our time. So, to us, it's once we approve a manager, it's approved, and we try to recommend that broadly. So let's just say that it goes into everyone's portfolio. We try to keep them fairly equal weighted. So the rebalancing will tend to be at the points where it becomes an outlier, whether because it hasn't performed and everybody else has, or because it's outrun everybody else. I think during this whole process, whether it's a year, 2 years, or 3 years, we're constantly evaluating the managers, and if something goes off the tracks, whether that be a style drift, key man or leaving, things like that, we will pull. But for the most part, we try to only rebalance whether within the portfolio something's going awry, or in the broader portfolio mix that, equities have run a lot, so we'll probably pull some from our long guys and reinvest back into the hedge funds to keep them at a weight that our allocation determines.
So, how many different funds and hedge funds and alternative, private equity firms do you cover right now?
It depends on your definition of cover. I mean, I think last year I did 236 meetings with different managers. This year probably on track to do even more. I mean, on our platform, we keep it pretty tight. We have about 12 recommended managers, but it's not just like logging on to Morningstar and searching a large cap growth manager. You really have to meet these guys. You really have to kind of hit the pavement. So it's a lot of meetings. We cover a lot. Our process and kind of our preference leads us away from we can weed out part of the 10,000 plus manager universe, but there's still a lot of long short equity and kind of long short credit guys out there that we try to take meetings with, kind of build the best ideas list, and have guys on the bench if something were to go wrong.
And what is your main criteria for when you're looking at these guys initially, and then what are you looking for after you place funds with them?
Yeah, sure. So I think in identifying them, we're looking for kind of the fundamental security selection. But when we evaluate, we're looking at the people in the firm. Is the team there that's kind of made that track record, the investment strategy, and that's probably the most important. We really want a sound process that can stay in place so that we can use kind of the past performance to determine, or at least have a good idea of what future performance should look like. Obviously, there's the qualitative or the quantitative part of the actual performance, and then we're going to go through the back office and look at the operations and things like that. And I think the ongoing monitoring is a mix of analyzing the returns and kind of the alpha, as well as looking at attribution. We're looking at their nets and grosses, making sure if, we're invested with a guy who we think is going to stay between 30 and 40 net, and, we wake up one morning and he's running, levered long, there's probably something going on there. But we do kind of quarterly calls at a minimum, at least one visit a year. They're in here a lot. We're looking at their letters, the filings, things like that to keep the ongoing analysis going.
All right, so if you're getting, if someone is not really performing well, do you follow them for another quarter? What kind of leeway do you give them, or is it just someday you wake up and you go, man, that guy did that, and boom, you boot him out immediately?
Yeah, it's definitely the hardest part of figuring out, what we're going to do. That when things aren't going your way, it's tough. I mean, it's hard to say what the tougher of two evils is. Is it kicking out a guy that is just having a tough time, that has stuck to his process and should rebound, and you boot him too early, or is it staying with a guy who there's something wrong and you're missing it? So we try to do a lot of work when there's underperformance and trying to figure out what that is. Is it just a headwind to the strategy? We had one last year that just he because of the nature of the product, he happened to be long cyclicals and short defensives in Asia, and it just was a tough bet to have on. And it wasn't because he was making some macro bet; it was because he was kind of a value guy, and there was a flight to quality, and things got expensive on the defensive side and really cheap on the cyclical side. Except that trend just kept hurting him. And what we figured out was, if you were to back things out, the stock selection really still was there. It was just a headwind. So we were able to stay in and get some rebound in performance.
Wow.
So, it really is, you have to do a lot of evaluation when things aren't going your way. I mean, listen, there's hard stops too, right? If you're starting to lose senior team members, if strategy's drifting, things like that, then we will certainly pull the plug.
Okay, and so over the last 5 years, I mean, I'm assuming that these alternative investments in hedge funds, this is with the performance that the markets had, I've assumed that they've lagged the broad market's performance.
I would say fairly broadly, that's probably accurate. I think I'm just looking across a list of guys we track, and the best performers are kind of in line. 27, 25, that range over 5 years.
Okay.
For the most part, we're looking at kind of mid-teens annualized over the last 5 years. I think while that number sounds tough when you're looking at 23 to 25% annualized returns on equity indices, these guys were doing it running 30% net. So I mean, if you just want to back it out on an exposure adjusted basis, while it was a drag, a lot of these guys put up major alpha. If you're just looking at it saying, at 30%, these guys should be up 7.5, not 15. So, it is there, and it's tough to explain. I mean, I think we're committed to the space, and I think, these strategies will outperform again. But there was a lot of headwind over the last 5 years.
Okay, and just quickly explain that you said the 30% of net. Could you just explain that, what that term means?
Yeah, sure. So, on the hedge funds, they can run long and short. So let's just say, the 100% of their capital is running long equity, and they're running 70% short equity. Their net exposure there is about 30% to the market if you just looked at it from an exposure basis.
Okay, and then just I know it's hard to name specific names, but just over the last few years, what sectors have been the best performing funds, and kind of what have been the laggards?
Yeah, I mean, I think from a sector perspective, tech and healthcare have been huge. There's been some beta in the space, and B, I think there's been actual kind of dispersion, winners and losers too. So sector guys in healthcare and tech have done pretty well. I think guys who are able to pick their spots and stay in, they'll take their lumps in the interim, but I think over the period have done really well. The ability to stay into a thesis has worked pretty well. We've seen growth certainly has outperformed some of the value guys on a 5-year, that's for sure. Over the last couple of years, it's a mixed bag. It really has been stock selection. So I think people with a little bit of a longer net exposure, having more exposure to the market, less shorts, I guess, certainly did better last year. It wasn't as much of a hindrance to the portfolios.
Okay, and just before you start looking to alternative investments, I know I've done some things with some CTAs and things like that. What would you look at for an average individual's portfolio before they should start considering these kind of investments? $1 million, $2 million. I mean, where do you feel that it would be, prudent to start, having a little bit more exposure to these funds?
Yeah, I think there's hard limits and regulations, so you have to either be an accredited or qualified purchaser. So you either have to have, I believe it's $2 million now as an accredited and $5 million as a qualified purchaser. So those are kind of hard limits right there, and that's assuming the funds offer certain share classes. But to us, we'd like to be able to offer it as far down as can be allowed. We really do believe in the space, and sometimes you have to kind of have fund-to-funds type aggregation vehicles to give access to smaller asset pools. But we think it makes sense, for anybody that can do it. I think that the important part is kind of viewing it as an overall portfolio context and not just as a separate asset class, because it really isn't. I think we look at it and say, what is this adding? And over time, we believe it'll reduce the risk of the overall portfolio, especially in an environment where bonds probably aren't playing the role they traditionally have. And we think, over time they can do equity-like returns. You just need kind of a broader cycle where there's a little less, where stock selection matters a little bit more.
Okay, and this one, I don't know if you're going to have a good answer for or not, but you obviously have exposure in following the investments in some of the biggest hedge funds and private equities funds that there are, and you see the way that they're allocating stuff and versus long versus short. Do you ever get signals from the for the overall market when they start to get heavily loaded, a little bit, I mean, obviously they're hedge funds and they're supposed to have an equal balance, but, is there ever times, I mean, like, with this market, we've like had a major run up here. Are there any times that you get, just by seeing their allocation shift, do you ever get cues from, for the overall market?
Yeah, I think you can. It's been tougher. I think some guys, it's been such a run that they're starting to see valuations where shorts just become more and more and more attractive. But they were saying that in the beginning of 2013, so I don't think that was the best signal then. I will say that over time, they tend to move their books on the margin, definitely in favor of kind of what might be coming up. I mean, they certainly talk to the companies. They're hearing what management's saying about kind of the upcoming environment. And so, as they start to shade things based on their conversations there and based on valuation, I think, you can definitely take signals from that.
Okay, we've had Doug Huber on the Federal Street Advisors, who has the very tough job of managing and evaluating hedge funds and private equity funds. Doug, thanks for coming on and giving us your outlook on these investments, and we'd certainly like to have you back on again.
Thank you, guys. Appreciate it.
Okay, have a good day.
Bye-bye.
Joe, are you out there?
I'm right here, Joel. What's up, man?
Not much, man. Smart young dude, huh?
Right. What? I mean, young though. I mean, that's like age discrimination. You're just pointing out the fact that he's youthful and energetic, and maybe he helps you feel dated a little bit.
Gosh, Joe. Joe, you just could something. There's a trend, and the trend is that Joe is always cranky. So that's one thing that you can count on.
Joe's
So,
just got the deadpan delivery.
yeah.
That's what it is.
Yeah.
We need to get maybe put a little something in that coffee or something.
I would like to say that Joel adds some color to the show, but I look at him and all I can think of is 50 Shades of Grey.
Okay. Do you want me to start coloring my hair? I mean, is that what you're telling me of? Yeah.
Oh, but
Hope you look this good when you're my age.
Joel, enough of your distractions. I have headlines to read.
Okay, let's
Ladies
go.
and gentlemen, editorial headlines from around the globe. Glenn Ford, Louisiana's longest-serving death row prisoner, walked free Tuesday after spending nearly 30 years behind bars for a murder he did not commit. According to the Capitol Post Conviction Project of Louisiana, a judge ordered that Ford be freed Monday after prosecutors petitioned the court to release him. New information corroborated what Ford had said all along, that he was not present at nor involved in the November 5th, 1983 slaying of Isidore Roseman, the project said. Ford's attorneys have argued his trial was compromised by the unconstitutional suppression of evidence and by inexperienced counsel. Police flooded Facebook's headquarters in Northern California to investigate a threat they later found wasn't credible. Menlo Park Police Commander Dave Bertini says Facebook's campus was locked down Tuesday night after San Francisco police passed along a report of a threat shortly after 7 p.m. Bertini says the threat was found to be unsubstantiated and not credible. He would not give further details. The area was declared safe and employees were allowed to leave at about 8:30 p.m. More than 6,000 people work for the social media giant, but it wasn't clear how many were at the headquarters at that hour. President Obama plans to order the Labor Department to expand overtime pay requirements to include millions more workers. The president plans to make the announcement on Thursday at the White House, a senior administration official confirmed to Fox News. Though the administration has claimed previous executive actions had bipartisan support, officials are acknowledging that this particular move will anger business groups and congressional Republicans. But the announcement would appear to dovetail with Democrats' election year strategy of focusing on income inequality and the middle class. The New York Times, citing White House officials briefed on the announcement, first reported that Obama will direct his Labor Department to require overtime pay for millions of workers currently classified as executive or professional employees. The British inventor of the World Wide Web wants a digital bill of rights to protect Internet users from surveillance. Speaking on the 25th anniversary of his creation, Tim Berners-Lee said he hopes to spark a global conversation about the need to defend principles that have made the web successful. He told the Guardian newspaper that the web was under increasing attack by governments and corporate interests. He said the system needed an online Magna Carta or foundation of rules to protect its openness and neutrality. Berners-Lee said in a statement on Wednesday he believes the web should be accessible to all from any device and one that empowers all of us to achieve our dignity, rights, and potential as humans. SoftBank President Masayoshi Son, drumming up support for the idea of merging his Sprint with T-Mobile US, said he can give US internet users a new option with lower prices and faster speeds. I'd like to provide an alternative, Son said in a speech Tuesday at the Chamber of Commerce in Washington. While wireless broadband isn't a competitor now with faster landline internet services such as cable, it might be with investment, Son said. SoftBank shares fell in Tokyo trading. The U.S. lags other industrialized countries in wireless internet speed, and its subscribers pay more than those in other countries, said Son, who is the chairman of Sprint. After meeting resistance from regulators for a T-Mobile deal, the billionaire is reframing his argument for consolidation in the U.S. mobile phone market to advocate for wireless broadband as an alternative to cable. Starbucks will soon let customers leave tips with its mobile payment app. The coffee chain says the mobile tipping option, which it announced more than a year ago, will be available on its updated app for iPhone starting March 19th. The rollout comes as the company's app has surged in popularity, with roughly 1 out of every 10 purchases now made with a mobile device. After paying with the app, Starbucks says customers will be able to leave a tip of 50 cents, $1 or $2 anytime within 2 hours of the transaction. The tipping option will only be available at 7,000 of the roughly 11,000 Starbucks locations in the U.S. that are owned by the company. Flappy Bird creator Dong Nguyen has said that he is considering bringing Flappy Bird back to mobile platforms. Nguyen said in an interview with Rolling Stone that he's not currently working on a new version of Flappy Bird, but said that if it ever happened, he'd make sure the game featured a warning to encourage regular breaks. Flappy Bird was removed from the Google Play Store and Apple App Store at the start of February with the title at the peak of its popularity. Nguyen said at the time that Flappy Bird happened to become an addictive product. I think it has become a problem. And the Department of Homeland Security plans to award a contract for the design of the next generation presidential limousine by late August to be ready by the time the next president takes office in 2017. According to a contract proposal posted last week by the U.S. Secret Service on the government's contracting website, the administration plans to award the contract by August 29th based on the best value to the government. General Motors has built the Cadillac presidential limousine for more than 30 years. A spokeswoman for Ford Motor, which had previously built presidential limousines for decades, didn't immediately comment on whether the Dearborn automaker plans to make a bid for the project. In today's trivia tidbit, Neil Young was at the South by Southwest Music Festival Tuesday to introduce Pono Music, a new online music store and playback system that he claims offers far better sound quality than what most listeners get from Apple and iTunes and popular streaming sites like Pandora and Spotify. Is it Pono or Pano? We'll say Pono. Hopefully that's right. Which reportedly takes its name from Hawaiian word for righteous, is centerpiece by an online music store and a Pono player that Young said has 128 gigabytes of memory and can store from 1,000 to 2,000 high-resolution digital music albums. The Pono player will be sold for $399 at ponomusic.com and will be available for pre-order beginning Saturday at kickstarter.com. It was not clear when the online music store will be open or how many recordings it will offer, though Young said all 3 major music labels, Warner Brothers, Universal, and Sony, will be participating. The Pono site said high-resolution digital albums will likely cost between $14.99 and $24.99 a piece. Thank you, but I will stick with my free desktop app with Spotify. That wraps it up for today's editorial headlines. Sorry, there's no trivia question today. You'll just have to wait until tomorrow to win that free 3-month subscription to Benzinga Pro. Just a reminder, ladies and gentlemen, the show would not be possible without our dear friends at Options House. They'll give you 150 commission-free trades if you sign up for an account through this page. There's buttons at the top, at the bottom right. Click on through, open an Options House account, get 150 commission-free trades just because you listen to Benzinga's pre-market prep, and then you can follow the great suggestions suggestions that Fari Hamzai makes, or Harlan Pyan, or Michael Pachter, Doug Cass, whoever comes on the show next. So be sure to go ahead and get those free trades just because you listen to the show. We're happy to have you on board. I think Brent is around here somewhere, just waiting to jump in here and take it away from
Rawr,
me.
here I am.
I'm passing the torch, Brent. What do you got going on?
Not too much. We got a couple minutes before the bell. We are sitting at 1857.50 on the S&P futures. Let me talk about some of the top upgrades, downgrades this morning. With the earnings season kind of tapering off, analysts are becoming a little bit more involved. So maybe putting a little bit more weight on some of these upgrades, downgrades this morning. Without further ado, the top upgrades. Goldman Sachs upgrading shares of Rite Aid from neutral to buy this morning. We have a Deutsche Bank analyst upgrading shares of Verifone following the earnings report last night. That analyst upgrading pay shares from sell to hold. Raymond James upgrading shares of AngioDynamics, ticker there is ANGO, Alpha November Golf Oscar, from market perform to outperform. Analysts over at Barclays upgrading shares of General Growth Properties GGP from equal weight to overweight. And at Goldman Sachs, also at Goldman Sachs this morning, shares of McKesson added to the firm's conviction buy list. Let me check that stock. This one should definitely be moving on that call. Not too much, up about $1.20 right now. That's about 0.7%. Not a huge move there in shares of McKesson, considering that it is being added to Goldman's conviction buy list. Some of the top downgrades this morning. Morgan Stanley downgrading shares of American Eagle to overweight this morning. Piper Jaffray downgrading shares of Forest Labs, ticker is Foxtrot Romeo X-Ray, from overweight to neutral. Also at Goldman Sachs, Motorola Solutions MSI downgraded to sell. A Barclays analyst downgrading shares of Urban Outfitters following earnings, was that 2 days ago? From overweight to equal weight. And then at Credit Suisse, an analyst this morning making a call on some of the home builders, downgrading shares of Toll, also downgrading shares of Pulte to neutral. And we are open for trade. Joel, a little bit of a bounce there at the open, 1859 and 3/4, kind of going back and forth between half and 3/4 there in the 1859 range.
Okay, yeah, we made a low in the pre-market, 1857 and 1/4. We've only hit 1858 here in the regular session. So if you're a bull like Harlan out there, you're looking for this pre-market level to hold. If in fact it does, we will see resistance starting at the low from yesterday, which was 1663, and better resistance at the close. It does 1665, but something tells me here that this pre-market low 57 and 1/4 is going to be tested pretty quickly here. So we'll take a look. I'm just going to highlight a few of these upgrade and downgrades. Yeah. Well, what about Rite Aid here? This stock, you said that, I believe that was Goldman Sachs here.
Big call from Goldman today.
Big call from Goldman. Goldman's probably leaning on this double bottom that the stock made here. And the last few sessions made a couple nice lows at 638, 640. So using that as a potential stop out point, trading at 660. Also a couple other lows under 640 as well. So picking a support level there. Coming back on the upside, you got a 3-day high in Rite Aid at 678, so that's another 15 cents away.
And you know what, Joel? Looks like Walgreens shares are trading up pretty in line with Rite Aid, about 3%, but then CVS shares trading down this morning. So big move higher in both Rite Aid and Walgreens, but CVS not following through.
Taking a look at WAGs here. WAGs did gap up here. Did find some nice support 3 or 4 days in a row. Just above the $66 level, you had 4 lows in a row between 66.27 and 66.64. Bumping up now. Just we hit 68.67 off the open. Falling off pretty hard off that. coincides with the 68.92 low you had from March 6th here. S&P's still settling back here. About to take out the intraday low at 1858 even. Test that 1857 and a quarter from the pre-market. Hanging out down here, but I just wanted to just talk a little bit here. We didn't mention it in today's show, but Facebook.
Ooh, I was gonna guess Tesla, then I was gonna guess JCPenney. Facebook would have been probably like my third or fourth guess.
Okay. What do you think the impetus was for this move from 70 to 72 over the last couple days? It was only
I gotta look at the chart here.
We just busted out. We made two highs, and you know what it was? It was analysts raising price targets.
Yep.
That's all it was.
I didn't see much else.
And when it gets to that point, if I would have heard like one more analyst upgrade to saying like to 90, then I think I automatically would have shorted it. I mean, they seem to get in on the tail end of things, and now you have Facebook sitting on some major support here, sprinted above 72 on a couple occasions, and I just want to alert our traders here that there is very critical support for Facebook here at the 69.41 level. We hit 69.54 today's session. 69.41 was your low from yesterday. And then if you go back a few more sessions, you had a low at 69.47, low at 69.62. Under 69.40, you gotta let this thing go. I mean, I just think that those upgrades were just a little bit too much BS for me under 69.40. Looking for a down vacuum here. Rockin' Haley OXGN. Now that thing was popping in the pre-market, right? Or is this one?
That's the one. Oxygen.
Yeah.
I think they were a metal stat.
Yeah.
It's come down a ton. I mean, it's up. It's doubled right now, but it's still come down a ton since where we were trading earlier this morning.
Yeah, and that one you got above the $6 level in the pre-market, traded up to $6.24. But we had pointed out that it tested the $6 area a few different times over the last few years. Now sellers have come in and this thing opened up. Let's see what the open was here. Opened up near the high, opened up at 528, hit 540, and now we're well under the $5 level here. So here's one of those occasions where they just got a little bit overdone here in the pre-market, opportunity to take some profits. So anything else you guys are trading out there you'd like us to take a look at, just popping on the screen here.
How about that Juron? That one is Golf Echo Romeo November. That was the other pharma play that had a huge move today. Doesn't look like it is selling off quite as drastically as Oxygen, but it is down from the morning highs.
Yeah, I mean, I was looking for maybe a little consolidation at the 175 area, but I think this is at the point where people are just like, okay, this drug's not coming back for a while. It's on hold. They're writing it off. They're selling it at $1.50 instead of selling it at $0. So no short covering here as of yet. Actually opened at the high 166, made a 147 low. People just throwing in the towel here. So not a good day to be a Geron shareholder. S&P's making me look bad here. Pre-market low 57 and a quarter. Hit 57 and a half. Pre-market low being protected. Harlan, if you're still out there, you little bull, maybe you caught this one right. Back over the 1860 handle. Our first resistance point, 1863, yesterday's low. And the close at 1865 and a quarter should be a real good resistance point. So let's bring in Shaky Jake for his trades of the day.
Good morning, Joel and listeners. So figure I'll hop on and take a look at some of the movers out there in the market. One of the ones I want to take a look at right off the bat is Rite Aid, Romeo Alpha Delta company caught an upgrade from Goldman Sachs this morning.
I've heard of them.
Yeah, I think I've heard of them before too. And
did they put it on the immediately and go out and buy 100,000 shares at the market list? Or
I think they wanted to make sure that they got their orders in first, real quick. But maybe that was yesterday. I don't know. I guess.
Or was it the best idea they ever had since their former best idea?
I'd have to check. check. I think it was just the buy, calmly drop a couple $1 million in it after they've put theirs in. But hey, you know what? Goldman Sachs has been good for 4% roughly today, so shares on the move. Basically, they're just saying the company's upgrade of its stores, to change the kind of facelift that they've received should help the company's numbers, and they're getting optimistic about it despite the recent run up. Joel, what do you think of the chart with this this rally? I mean, you look at it since October. I mean, just huge move.
Yeah, if you didn't want to buy a gap situation here, you didn't even have to. 663 was the high from yesterday. You made a 659 low, so you're a little bit of a scalper there. You could have picked it up off the open at previous day's high and got a few shekels out of it, as Fari would say. I see a couple highs, 673, 678. That's call it 675 resistance point. I mean, you got a lot of few highs here. Just people have been defending that $7 level. The recent high of the move has been 687. So they are pushing it up into resistance here. Break out above 7, and I think you could really get excited. I mean, this issue hasn't been up in this area. Let's see, in mid 2007, it traded 674. So you're talking about some major long-term resistance here. Above, if you can finally get a close above that $7 level, then you got some room on the upside.
I know another one that's moving to the upside. Another retailer is JCPenney this morning. Caught a 3% run. Stern Agee came out with a report that was it's not. I don't want to say it was necessarily bullish. It was titled Right Aid is Right On, but they also, I mean, some of the other the notes, or some of the notes in the report weren't exactly as bullish, but basically they said that the fact that the home department is now switching back to a commission model from Ron Johnson's model that he had switched things over to, and that basically the company is almost completely done switching over. They didn't think it was necessarily worth more than single-digit growth, but they did say that it was worth growth in general. So JCPenney getting a little bit of a move there. It's had a pretty solid month so far.
You telling me
Yeah.
that?
So what are you thinking here, Joel?
It had that long-term resistance that it got through yesterday, but only momentarily. And now you're coming back after making that 928 high yesterday. I think you're getting a little seller's remorse here. Oh, I should have sold it over $9. So you got up to 897 in this session. I just think might want to look at your open book here, see if there's some big orders in the 9 handle. I just don't see this thing ripping right back up to 928 today. Had a little bit of a buying balance, but still opened up near the low within yesterday's range. So if you're trying to day trade this, just keep an eye on that early morning low of 870. What else you got for us?
Well, another one, obviously we've got Tesla's on the move once again today. I guess it's back in the green now. So earlier this morning it was down 1.6%, but now at the open we've gone right through those losses and it's up almost 1% now. So the news this morning was that Ohio is now considering banning the direct sale of these vehicles as well. New Jersey banned it yesterday.
Why?
It's lobbying from auto dealerships and large auto companies in general, because large auto companies have always had to deal with not being able to directly sell, so now they don't want Tesla to have any kind of an advantage here, and it looks like they've got a lot better of a lobby than Tesla does.
I just don't see that holding up. I mean, it's free cars for free men. I mean, you gotta oh, that's free markets for free men.
Oh, right.
I don't know. I just very skeptical here. It is taking a toll on the share price. Did get a rebound this morning here. Tesla, just kind of the earnings fade here. You had the euphoria. I'd just be keeping an eye on the 228.45 level. That was low on the day of earnings and just had a nice move off that. Below that, you start to fall into the gap area. Looking at the range from yesterday, you did take that low out, 232.43, but not by much. I don't know, something like maybe if it gets back up to 240 here, you may attract some offers. Being a nice round number and kind of trying to catch it on the rebound.
So moving over to some of the earnings reports this morning, we did have Express coming in 57 cents versus the 59-cent estimate. While revenues came in at 715.9 million versus expected 722.02 million. So Express with a little bit of a miss there on the top and bottom lines. Echo X-Ray Papa Romeo is the ticker there. Let me see if I can pull up any guidance for you guys. Looks like the fiscal year $1.03 to $1.23 is what they're expecting. Street was looking for $1.58, so a little bit of a miss there. First quarter, they're looking for 12 cents to 18 cents. Street was looking for 41 cents. That's
Yikes,
rough.
not good. Got nowhere near that pre-market low of 14.65. Made a low at 15.69 in the session, which was quite a bit below that gap down, but from the $18 area, boy. 1620 minor resistance there because you got that gap all the way to fill up. If in fact we go back to that low 1569 here, you just got to figure that all the way down to the $15 level, people will be trying to bring this thing in from the short side. But the fact that they just didn't crack it off the open here just makes me think that it's a rout already, but I just don't think it's going to turn into a bloodbath.
Well, I guess it's taking the express lane to the downside.
Yeah.
Oh. All right, I'll show myself out after that one. I got one more thing, though, actually. Vail Resorts reports after the close today.
Mountain.
And the only reason that I really bring this up, and, it's kind of a cool company to follow, but everybody else has been blaming the winter and the weather for bad results. Can they blame the weather for good results? I'm trying to find a company out there that somehow made light of this, and I would think, with all the snowfall and how cold it's been, that's got to be helping Vail in some way. They're expected to bring in $1.87 versus $1.65 last year, $471.16 million versus $422.45 million last year. So they're not wildly inflated numbers versus what you saw last year. I don't know. I think it would be kind of interesting to see if we get a little bit of a weather boost for Vail instead of a weather loss.
Not to take the contrarian side, which I always do, but what if people couldn't get there?
I know, that's the only thing I'm thinking of. I'm just trying to find someone that benefited from this weather because I am certainly not.
Okay. All right. I just wanted to point that out to you.
Fair enough.
What I like about this is just ahead of earnings is you gotta have identical range days. And Dennis was in Vail a couple of weeks ago, very busy. So Dennis is issuing a positive reading here on Vail. Identical ranges the last two trading days, 71, 66, and 70. Your highs on the upside. I expect that to act as resistance again today. 70, 49, and 70, 55 on the downside. I expect that to act as support today. We'll be trading a breakout of those either way off the earnings. So it's 9:45 here in the snowy Motor City. More snow coming down. I better get out of here, get home, start shoveling my driveway. S&Ps are at Harlan's number here of 1855.50. We made that low. I couldn't find any support in there. I'm looking for us to dip into the 1840 handle today, so we'll see what happens. That's our show for the day, folks. Have a good trading day, and we'll be back with you tomorrow.